G'day everyone, welcome back to Pete's Investing. Today's February 27, 2023. This is the iron ore price update. You see here the price has been consolidating between these support and resistance lines drawn previously, and on this resistance it actually reached there and bounced back down quite significantly with this bearish candle. But you'll notice on the CCI it's in a pretty strong uptrend at the moment, and the Stochastic has reached the midpoint and just hovering around there at the moment. To get further bullish on this, now you notice that the 4-hourly and the hourly charts are showing pretty bullish signals on the CCIs, but notice also on the Stochastic on the 4-hour chart it's reached the overbought, so we may see some weakness. Now there is a key resistance level being formed at this top here, which was drawn, so we may see some retracement further to the downside, and that's why I've drawn this key support area here on this blue line in terms of where the price may hover in the short term. So at the moment it's sort of hovering in that little area, it's consolidating in the price on the daily. We need to see a break above that resistance line on that red line there to be more bullish, and if you're looking at potentially iron ore going further north. So at the moment that's where it is, and again, as I said, is a key resistance there, and it may well retrace to the downside on that level. So let's just draw a quick Fibonacci retracement to see where that potential retracements may be. So you can see there on the hourly chart it's just before that 23% retracement level, and if it does break through there, then the next level will be the 38% at that point there. So stage by stage, let's see how it goes. Still pretty bullish at the moment, but again we need to be more bullish if it breaks above that resistance line at this point. To understand how to properly trade using the average down process, reference the playlist at the end of the video or some links in the description below. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends if the stock price goes against you. Don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating, and if you are going short and if you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.